Good afternoon and welcome to Financial Booklet. It is Thursday, January 22nd, 2026. Today we are looking at a significant upward revision in U.S. GDP figures, a flurry of activity surrounding artificial intelligence infrastructure at Davos, and a complex day for the cryptocurrency sector as legislative battles heat up in Washington while institutional adoption expands. I'm your host, and here is what happened in the markets today. We begin with the broader economic landscape. The U.S. economy appears to be accelerating, as third-quarter GDP figures were revised upward today. The data shows growth hitting 4.4%, marking the highest level recorded in 2 years. On the geopolitical stage, markets reacted to developments following a meeting between President Trump and NATO leadership. Following discussions regarding Arctic security and the alliance's direction, reports indicate that the president has pulled back on recent tariff threats. This de-escalation comes as NATO Secretary General Mark Rutte acknowledged the U.S. position on Arctic security concerns. Meanwhile, in the energy sector, major oil companies are reportedly exercising caution regarding Venezuela. Reports suggest that, despite potential opportunities, these firms are waiting for clearer conditions before committing to a third round of investment in the region. Turning to technology and artificial intelligence, the conversation at the World Economic Forum in Davos continues to dominate headlines. Nvidia's CEO pushed back against the idea of an AI bubble today, stating that the sector requires trillions of dollars in additional investment to build out necessary infrastructure. This aligns with comments from President Trump, who mentioned that Meta CEO Mark Zuckerberg recently showed him plans for an AI data center the size of Manhattan. However, not all voices at Davos were purely optimistic. BlackRock CEO Larry Fink used his opening remarks to issue a stark warning regarding the rapid deployment and implications of artificial intelligence, balancing the enthusiasm seen elsewhere in the sector. Moving into the digital asset space, Bitcoin saw price action moving back near the $90,000 level following the geopolitical updates and tariff news. On the regulatory front, the landscape is shifting rapidly. President Trump vowed today to sign a major Bitcoin bill very soon, reiterating his goal to make the U.S. the crypto capital of the world. However, the legislative path is complicated. A prominent crypto market bill is reportedly hitting a wall in the Senate after Coinbase pulled its support. Consequently, the Senate Agriculture Committee is moving forward to mark up its own version of the bill, distinct from the Banking Committee's efforts. In terms of market structure, prediction markets faced a legal setback. A judge ruled today that Massachusetts can temporarily ban Kalshi's sports betting markets. This comes as Native American tribes voiced complaints that such prediction markets are siphoning revenue from traditional casinos. Despite the regulatory friction, institutional products continue to roll out. Delaware Life has launched an index annuity that offers Bitcoin exposure, a product powered by BlackRock's IBIT ETF. Regarding market analysis, Cathie Wood stated today that she believes Bitcoin is nearing the end of its down cycle, predicting a shallower decline compared to previous 4-year cycles. Similarly, analysis from Bitwise suggests that the fourth quarter of 2025 may have marked the bottom of the bear market. In the Ethereum ecosystem, metrics show that funding rates have turned negative, while whales absorbed approximately $130 million in ETH during the recent dip. However, security remains a concern in the broader sector, as the Saga EVM chainlet was halted today following a $7 million exploit. Finally, we wrap up with corporate news. Earnings transcripts were released today for OFG Bancorp and Teledyne Technologies for the fourth quarter of 2025. In the retail sector, Lululemon is reportedly facing headwinds, while competitors like Fabletics are seeing increased momentum. Meanwhile, analysts are watching salad chain Sweetgreen closely, as it attempts to position itself as a long-term compounder in the fast-casual dining space. And in international business news, billionaire Jeffrey Chea's Sunway is proceeding with its $2.7 billion takeover of IJM, despite an ongoing money laundering probe. That brings you up to speed on the financial markets for Thursday, January 22, 2026. For full transcripts and detailed reports on all these stories, you can check the links in the description below. Thank you for watching Financial Booklet. We'll see you in the next update.